Hims and Hers reported earnings after the market closed on Monday, and results were really solid across the board, 95% growth. It's really hard to argue with that. But the investors and analysts are obviously focused on what's going on with GLP-1s. So we got at least some answers to that. That's going to be something that's going to be probably rolling off at the end of the first quarter. But even with that, management is guiding for phenomenal growth for 2025. I think this is long-term, the kind of company that investors want to be very interested in. That said, the stock is down 18% after hours. So I'm going to try to dig through all the numbers and tell you what's important long-term. That's my perspective as an asymmetric investor. I'm invested in Hims and Hers because I think the future, a decade, 2 decades from now, is extremely bright. But that said, it's going to be a volatile ride. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. And let's start with the high level numbers. $481 million in revenue for the quarter, $1.5 billion for the full year, up 95% year over year for the quarter. So just phenomenal growth. That was definitely helped by GLP-1s. That's not only bringing in new subscribers, it's also bringing in higher revenue subscribers. A lot of those subscribers are actually paying for a year ahead of time. I'll get to some of the numbers and the impact that has on the income statement and balance sheet. They were profitable as well, $26 million in net income, $126 million for the full year. Remember, in the third quarter, there was actually a tax benefit. So that was kind of a one-time benefit there, but things are moving in the right direction. Adjusted EBITDA is going to level out kind of some of the lumpiness that you can sometimes see on the bottom line, $54 million there. Operating cash flow positive, free cash flow positive, subscribers. I will get to the detailed numbers, but that subscriber number just continues to grow like crazy. And this is really the big number. Monthly online revenue per average subscriber continues to move up. $73 is what they reported for the fourth quarter. And let's just pull this up now. This is a chart that shows the number of subscribers. You can see that growing steadily, a 59% compound annual growth rate. And then the monthly online revenue per average subscriber, now $73. Management did say that they expect that to continue to move higher. So obviously helped by GLP-1s over the past couple of quarters, but that's something that will probably continue as they're doing more personalizations. Some of the new GLP-1s like liraglutide, which are going to be coming later this year, menopause treatments, those may be a little bit higher price point. So should see that continue to move upward. I thought this was really interesting. They gave a lot of information about what they say is their observed total customers in this kind of competitive environment and the percentage of sales. And you can see that Hims and Hers, almost 50% of the market based on this information that they have. So take that with a bit of a grain of salt. But it certainly seems like this is the one company that's reached a level of scale. These other companies are not public, so we don't necessarily have all of the details of their numbers. But it certainly seems like Hims and Hers is in a very good position in this kind of telehealth, telemedicine market. Now, before we get to some of the strategic stuff, I did want to highlight what outlook looks like for the rest of this year. Q1, $520 to $540 million. That's going to be year over year growth of right around 90%. So it's about the same as they grew in the fourth quarter of 2024. Adjusted EBITDA, 55 to 65 million. Obviously, that growth rate is going to come down in 2025. Remember, semaglutide, GLP-1s are going to be coming off it for sure by May, but management said basically by the end of the first quarter, but they're still expecting the remaining 3 quarters of the year to average higher revenue than we're going to have in the first quarter. So this has always been the question. We obviously know that GLP-1s over the past couple of quarters and then in Q1 2025 were going to be a tailwind, but the rest of the business continues to grow. Analysts were really trying to figure out, hey, what were the exact numbers of GLP-1s each quarter? And you can see from this quote here that GLP-1s did provide $225 million of incremental revenue in 2024. So that's going to go away. But they also expect $725 million for the weight loss category overall in 2025. So you go back to this guidance for the full year, $2.3 to $2.4 billion in revenue, $725 million from weight loss. That means that about 70% of the business is not the weight loss business. Now, remember, weight loss includes GLP-1s, but there's a lot of other treatments that they have in that weight loss segment. So the market has clearly been very, very focused on what's going on with GLP-1, but Hims and Hers is not a one-trick pony. And that's where I think we can go to some of the details, they put out this presentation with the earnings report, and you can see that there are basically 4 segments that they're now operating in. And you see these areas down here. These are areas for potential future growth. Low T and menopause are 2 things that they're going to be adding in 2025. They have already talked about that part. Some of their acquisitions are related to that, but then you've got a bunch of other things that they can move into with weight loss, digestion, diabetes. Mental health is probably going to be an area where they're going to grow over the next few years. PTSD, insomnia, and substance abuse are 3 things that they have outlined here, and then dermatology as well. The vision is to bring more advanced diagnostics. And I think this is not only the lab testing, which is related to the Tribe acquisition that they announced earlier this month, but also all the data that we're collecting on a daily basis. Your phone's collecting data. You potentially have a smartwatch that is collecting data. Can you get cholesterol information, heart rate information, sleep information that would help provide a better personalized treatment and service? And then artificial intelligence is going to provide things like follow-up care quality improvements. And at the end of the day, Hims and Hers building a platform with all of these tools, whether it's AI or testing or the pharmaceuticals that they can make in-house. These are all things that are part of Hims and Hers as a platform. And again, I think investors need to think about this more like as a platform company, not just as a product company. And these are the 3 pieces they've been acquiring here. The peptide facility was acquired recently. Same thing with the lab testing facility. And then their outsourcing facilities, 503A and 503B, is where they've been adding capacity over the past couple of years. The current compounded semaglutide, which you see here in the middle, is also not going to be the only treatment that's going to be available in 2025. Liraglutide is going to be coming later this year, probably at the very end of the first half of the year or beginning of the second half of the year based on management's comments. But again, there are other solutions that they have for people who come to Hims and Hers for weight loss issues. So when you add all of this up, I think Hims and Hers is definitely heading in the right direction. The market has been very, very focused on what's going on with GLP-1s, but the story is much, much bigger than that. This is a company that's building a platform, building all the tools to take in all the information that's going to provide the best solution and service for their customers. So that's things like lab testing, their medical record, the asymmetric relationship that you can have with providers and doctors. They're vertically integrating to provide personalized solutions. They also have off-the-shelf solutions and generics that they have in a number of different products. And they're adding to the suite of services and solutions that they can provide. That's what's ultimately going to grow. It's going to allow Hims and Hers to reach more customers, increase that subscriber base, and also increase the revenue per subscriber. So I think everything's pointing in the right direction. The market, from a stock perspective, just seems to be extremely volatile depending on the day. Maybe it's a short squeeze earlier this month. Maybe it's focusing on one number or another in the reaction to this actual earnings report. But if you're a long-term investor, not a lot of companies that are growing at nearly 100%. And even when you look at that growth rate, excluding GLP-1s, growing in excess of 40, 50%, that is a phenomenal growth rate for any company. And investors really need to keep that in mind. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So where does Hims and Hers stock go from here? Well, it's probably going to be a volatile future, but I think this is a company that's heading in the right direction, growing extremely rapidly. Don't forget that those margins are increasing. Management said that they're expecting operating leverage to really start kicking in 1 to 3 points or percentage points of leverage on their marketing spend. That's really been the question for me before I got into Hims and Hers was this a company that was on what I would call an customer acquisition treadmill? So you are spending $100 to acquire a customer, but then do you ever make that $100 back with profit? And until Hims and Hers reached profitability, that was a real fundamental question. Now it seems like they're moving to the point where they're at a scale, they're able to leverage some of their costs and some of their marketing spend so that they are growing profitably, and that should continue in the future with more leverage on that marketing spend. That's a phenomenal position to be in long term. And I don't think the stock is all that expensive as I'm recording, and this is going to be based on the closing numbers on Monday. The enterprise value to sales multiple is only about 8.8. On a forward basis, that's about 5.4. That's probably the best valuation metric to look at. Price to earnings multiple on a forward basis is about 91, but we're not looking at Hims and Hers as a company that should be maximizing its profitability right now. We want them to be maximizing their growth. So trading in a mid-single digits price to sales multiple for a company that's growing at least in excess of 40%, if not even higher than that when you exclude GLP-1s, I think that's a pretty reasonable valuation. I'll just put up some of the really impressive charts here. The first one I will go back to is their number of subscribers and then the revenue per subscriber on a monthly basis. This next one is their revenue and then their operating income. And I put these on different scales just to show the leverage that you're getting on that operating income that continues to charge higher as the company reaches scale. That's exactly what you want to see. And then this is not updated yet with the Q4 numbers, but the cash on hand continues to be impressive. At the end of Q4, there was almost exactly $300 million in cash on hand, no debt. So that gives management the flexibility to be able to acquire companies that make sense to fit into the portfolio. They've done a little bit of that in 2025. I would expect that to continue in the future, maybe even some of the competitors who could potentially take market share, but maybe operate in a little bit different market. So I like everything that I'm seeing from hims and hers. Doesn't mean that the stock isn't going to be volatile, but if shares do come down significantly, last time I bought shares was in the low 40s, but if that stock price comes down into the 30s or even the 20s, that's when I would be extremely interested in adding to my position. Don't know if we're going to get that opportunity, but as a long-term investor, that's certainly when I would be looking to buy stock. Let me know what you think about the results from hims and hers. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you next time.